Hey guys, Mike here. So obviously, big green bounce in the market today. And as I told members this morning and even Friday when I did a private video for them, I would not be surprised at all to see a big bounce this week. Because why? Because as you can see on the S&P right here, we're sitting right at the bottom of that channel. That's where we bounced, 2 gaps above it. And you know what? We were oversold. Like every time it's oversold, look at that. You get a bounce. And here we are with the bounce, right? If you sit there and, look at the weekly right here. What's going on? It's really hard to get oversold on a weekly, let me tell you, which I'm going to show you that. It's done it twice already. And so, of course, guess what? You get a bounce. But if you scroll back, you see the last time we got oversold on the S&P weekly chart, the 2020 crash. That's it. That's how it works. Now look at the Nasdaq right now. Same thing. 2 gaps above the fill at the bottom of the channel. And here we go. It's oversold. When oversold, it bounces. Anywhere time it gets anywhere near oversold, it's bouncing. And this is on the daily. On the weekly, we were oversold, of course, but as soon as we got oversold, that's when you saw the bounce back up, as you can see right there. And the last time you seen us get oversold was back in 2020. Again, not easy to get oversold on the weekly. It's usually just during crashes, okay? And as you can see today, look at energy, up 4%, leading the way of all sectors. And so as you can see, it was up the most today, bouncing back like a lot of people did predict. And that's what I was doing that video this past weekend saying, hey, is this finally what we were waiting on, or is this just that pullback? Same thing we got in oil before, right? Where it pulled back. And I said, until it breaks that trend line, which it has not, I don't see any stop in energy right now, because I think if you listen to the hedge fund managers and people on Wall Street getting interviewed, like every one of them are, kind of have sent this message saying, hey, the CEO's been very clear. They're not drilling anymore. In fact, today it was like Halliburton and some others came out and increased their dividend by like 40%. So they're going to be returning massive amounts of money to the shareholders. Stock buybacks like crazy. So what's that going to do to those stocks? It's going to take it up, right? And of course, they want oil prices to stay really high. And so they're going to do their best to keep it there. And so, that's something you got to think about. And I'll say another thing about this bounce, and I saw this chart yesterday. It was, I think if I read this correctly, we haven't seen this amount of shorting of the market since '08. That's the level we're at now with shorts. And so what usually happens when we get heavily shorted, we get short coverings, right? Which is why you see like everything. You saw all the sectors up, right? All the sectors moving up, stocks moving up 10, 15%, Coinbase. I forgot, it was a massive today. All these stocks, any Cathy Wood stock, especially which are highly shorted, you see that. And so, it doesn't surprise me a bit. Again, it can keep going because they still got to cover those shorts, and you got those 2 gaps to fill. So it doesn't surprise me a bit as far as this being like oh my God, did we bottom? We're heading to all-time new highs or something. I don't know, but I simply just always ask myself 3 questions when I see movements like this, which I enjoy seeing because, that's why I'm always investing in the market, is I get to see my stocks finally start heading back up a little bit. But I always say, okay, did the Fed announce a decision today? They're going to pivot and not do any more interest rate hikes or stop rolling off the balance sheet. I haven't seen that today. Did the government come out and start announcing new rounds of stimulus checks? I haven't seen that today. Did all of a sudden inflation start coming down? Did we get something happening there? And I didn't see any news on that day. Maybe I missed them, but I just look at that kind of those 3 questions. And if the answer is no to all 3, then I say, well, we'll see what kind of legs this rally has, but I'm not like going to sit there and put any money on it. Is really going to go too far? And again, I always say, until it breaks out of that channel, and it starts heading up, or at least starts consolidating sideways for a while, which is what usually happens in markets like this, then enjoy these rallies. I'm going to enjoy the rally while I can, as long as it lasts. But I think we all kind of know what time it is, right? We've seen this movie before about, 4 or 5 times already this year. So, we'll see on that. But the one thing I want to talk about was what I heard Sunday. And, it was the Treasury Secretary coming out and saying what she said. And so that right there, when your Treasury Secretary finally comes out and says that, since she's been wrong this whole time anyway, you say, well, maybe she's wrong about that. But, for them to come out and say that, they're marching her out there for a reason to say that, right? To kind of brace her, like, hey, it's high for a reason, right? And, I noticed, too, there's a lot of speakers from the Fed coming up. I believe it's like in the next couple of weeks. I saw it. I'll have to pull it up and show it to you guys tomorrow or something. But it seems like a lot more than usual. that are going to be out there. So I'm definitely curious to see what message they're going to be marched out there to talk about. But the list was pretty long. And that's why I always go to this chart, guys. I'm telling you, it makes no sense that they're going to be able to do what they say they're going to be able to do. I mean, this is the Fed funds rate. You see the downward trend line. You see where they're talking about 3.8% is where they want to get it to. You can see we hadn't even been that high since like 06 or 7 right there, I think it is. And look at the debt. Look at what the debt was the last time we had the Fed funds rate at that. I mean, what if I draw a line over? It looks like around 10 billion. Oh, I almost said billion. That's funny, isn't it? 10 trillion, excuse me. And now we're over 30 trillion, right? Only 14 years later. So, I can't even imagine. I mean, there's just no way. And don't forget to hit that like and subscribe button, guys, if you get something out of this. Because they would literally have to either add like $1 trillion onto the deficit or end up cutting somewhere else $1 trillion in other areas to fit that. And I cannot imagine them doing that. That would make like no sense. And so, and a lot of people, I've heard it so many times over the last month, they're just waiting for the Fed to make their pivot. They're waiting for them to make an announcement saying, we're going to freeze rates, maybe stop running off the balance sheet too, because in the past that's always been a huge catalyst for the market, which tries to be forward thinking 6 to 9 months out or whatever. But then again, as I keep raising my hand and saying, yeah, but it's never had inflation at these levels before. And so could they actually afford to do that? And so, I wouldn't say that's the best investment strategy is to, try to depend on the Fed for anything. That's just me. But the one thing I discovered when I was looking through, and I sent this to the members Friday, was, which areas are going to, and I'm doing some detailed research on this, which areas recover first. There's always stocks that recover before the market ever overall recovers, right? And I was looking at the Nasdaq 100. And I was looking at the Nasdaq 100. And it's in this ascending channel. It's almost down at the bottom right there, getting ready to bounce. You can see it's bounced multiple times off this channel. But what was interesting and really shocking to me is when I went over to see how many of the Nasdaq 100 stocks are above their 200-day moving average. And you can see right there, it's around 5.5 right there. And what was really surprising is that is lower than the 2020 crash, 2018. You go all the way back to 2015-16, 2011. But, they're nowhere close. Look at that. You have to go all the way back to 08 to see these kind of levels. And it was actually the level it was at before I started to pivot. But understand, this can get all the way down to 1.5 to 3. But we hadn't seen these levels. That's how decimated Nasdaq 100 has been. And I want you to remember that date, October 8th right there. That's like a key date right there. Because when we go over to the Nasdaq 100, you can see that's not even the bottom, right? That's way up here. And, it had a lot farther to drop going down right here. I mean, as a matter of fact, if I measure it out, the NASDAQ 100 dropped another 19% after that. But obviously, the stocks start to recover before we ever hit bottom. You can see that. And what I mean by recover is they started moving, a lot more stocks were coming above, or not a lot more, but the stocks started moving up towards their 200-day moving average before the index actually bottomed out. And if you wonder, you might be thinking, well, the NASDAQ, this must be all like tech stocks. But actually, this is where Kathy Woods was right when she said the NASDAQ has absolutely diversified itself. I mean, you see Pepsi right there, you got Costco, Comcast, you keep going down, and you'll have, Starbucks, Booking Holdings, Charter Communications, Gilead Sciences, Intuitive Surgical, CSX Corporation. And if I keep scrolling down that list, you're going to see many more sectors in the NASDAQ 100. And so, I just found it amazing that many stocks, or almost all of them really, are below their 200-day moving average, and you have to go back to 08 to get that kind of level, and that kind of surprised me, but it just goes to show you, obviously these stocks are sold off really fast, really hard, because again, the S&P still has about around 12% of its stocks above their 200-day moving average. But the one thing I got out of that when I looked at that was, you saw the pivot, right, on October 8th. You see stocks moving above their 200-day moving average on the NASDAQ 100, but you saw the NASDAQ 100 drop another 19% while that was going on. And so I'm doing a lot more research now, which I'll bring you guys when I find it, because I need definitive data to show it happening, what sectors are moving up, what's the signs to look for when that's happening, to know it's actually going to be happening before it happens, and which would be nice to have. And I really think a lot of this has to do with going back to another video I did about commodities, right? When they're skyrocketing up, what gives the S&P that final leg down is when commodities fall off a cliff, oil stocks, things like that. And of course, that money just didn't go into La La Land. They're taking all those profits because they ran those stocks up so high, and they're rotating into what? The most beaten down sector. What is that right now? A homeless person with no internet connection could probably answer that question, right? Tech. I mean, it's that bad, right? They've been hammered down that much, small caps and stuff like that as well, which have been beaten down more than anything. And so, yes, that's going to happen eventually when we see that pivot. But again, like I said in that video, I don't see us having a final leg down until finally commodities break, right, and start absolutely falling off a cliff. But we'll see on that. But I'm going to do the research. Hope I get done this week. We'll see. But I'll definitely let you know, what to expect on that. Again, I mean, obviously having Janet Yellen come out and say, hey, it's going to be high inflation all year. And if that's between 5 and 7%, let's say, for another year, that's going to be brutal for the consumer, the economy, and of course, overall earnings, right? So the market. So anyway, I hope you got some out of this. Hit the like, subscribe button if you did. I'll let you know what I find in that research and stuff. And of course, if you have input on that, feel free to put it down in the comments. I always enjoy the comments and the input you guys have, and I really appreciate that. Makes it a lot more interesting, to say the least, and I read every one of them. So hope you guys have a good one, and I'll see you tomorrow.